Hey everybody, this is Ryan Mallory doing another episode with you guys here on my YouTube channel. Basically today I just want to go over a bunch of charts, a lot of things that are hitting the market. It's the end of Q2, so let's figure out what lies in store for us for the rest of this year here. First off, I'm going to throw up a chart of SPY, so we're going to just jump right into these things right away. You can see there's some resistance on the SPY going back to the September highs. It connects the highs that were made in late April and then again in mid-June. So we tried to break above it. We didn't quite get there, but looks like we're on our way to test it again. Now you have the G20 summit this weekend between the Chinese and US presidents, where it doesn't go well. Probably going to see a sell-off on Monday. However, if they have something like we're not going to extend any further or additional tariffs, then probably we'll see some kind of bounce in the markets on Monday. So SPY really at the cusp of all-time highs, needs to break through that resistance and then some, because we broke through resistance back in June, but we didn't get that follow-through. We got an immediate sell-off thereafter, and we haven't been able to retest it yet. So breaking through it, making new all-time highs is going to be important. A couple of charts that I really like. BABA, trying to break above that 50-day moving average, but I do like this consolidation here. You've got about 7 days of consolidation. It's holding strong there at the recent highs. When I say recent highs, I'm not talking about these highs that were established back in May. I'm really just talking about from the month of June. But it is some good consolidation. I think if it can break below or above Thursday's highs, I think it'll make another push towards 190 over the coming months. So I do like BABA. I think it's a good chart. Of course, you do have the Chinese exposure right now, which things like Apple and Caterpillar and some of these other big heavy influencers or people who are really dependent on Chinese sales, they're going to get hit if something like Saturday doesn't go well. IQ. All right, I actually traded this one just on my own last year. I didn't do it in the swing trading splash zone. I just bought it in my own personal account. Goodness, I made a killing off of it because I hit this rally right here. But I don't have it anymore. I sold it, and now it's trying to perk back up again. It's crossing back above the 20. I don't know. I think the big move was to be long on it on Thursday, and there was no real reason to be long on it going into Thursday either. So it was really a coin flip. You can buy it now, but you're really chasing it. You don't have a good risk reward on the trade, so I'd stay out of it. You also have some resistance here at the 200-day moving average. You can see in April, again in late April, and again in May. It's had a hard time breaking through that 200-day moving average. So why would you trade it until you can see what it does? And then once it does do it, it's going to be so overextended unless it consolidates some after it breaks above it. So I don't see a trade there. It was trending on StockTwits today. I thought I'd bring it up, but don't really care for it. CSCO. This thing, I mean, you had a double bottom here, and it looked like it was going to break out, and it did temporarily last Friday, but it gave it all back, and now it's creating like a double top scenario here. So if it breaks, get a line here, and then I'll just drag it up. Look, it hasn't confirmed the double top yet, but if it breaks back below 54.50, it's got a double top and it needs to close below 54.50 in order to get it going. Another example of one would be PepsiCo, right? We got that confirmation today. It made a double top, and it broke below that 131.40 level that it needed to confirm the double top pattern. And that's a short-term pattern. I don't know how long that'll go for, but I don't know. It could retest the 50-day moving average, or probably what I would be looking for is a retest of this longer-term trend line in place. So maybe it goes down to 124. I think that's a best-case scenario, honestly. This is usually a really boring stock. I don't have anything exciting to usually say about the stock. It's really boring. You're in it really for the dividend that they take a massive amount of debt out for. But look at this. 1.6%. That's like a huge rally for AT&T. Usually doesn't make big moves like that. But look, I mean, it's breaking out technically. Do you go long on it? I mean, sure, you might get another 3 or 4% off it, which isn't bad, but I don't know. I mean, you're kind of risking 3 or 4% in order to make that 3 or 4%. So the risk reward isn't that great, but the chart pattern breakout is really nice. I like it. And then you got, of course, this massive long-term downward trend line in place that it's not breaking above. And look at that. It tested it right there today and could not push above it. So you do have that hanging over it as well. I'm actually in about 4 trades right now. And Netflix, geez, this stock irritates me to the core. It makes a nice little run. I did make some decent profits off of it last month, but it didn't go up today. I would have thought that it would have. I would have thought that with some of the strength in the market from the early going that it would see a little bit of a pop, but it didn't. but I still think the chart looks pretty good. You have this like inverse head and shoulders pattern here, left shoulder, head, then you have a right shoulder there, and then you got some consolidation above the neckline. It just needs to push through. I would have liked to have seen that today. It didn't happen. It did work off some of the overbought conditions of late, so let's see if Monday holds anything special for it. And then the other ones, I got into GRMN. I hate this stock, man. I used to make fun of my friend for trading this stock all the time, and now I got sucked into it, and it did jack squat for me. I got stopped out of it today right at the open. I took like a 2% loss on it, a little bit less than a 2% loss. Nothing major, but still it sucks. FTV, this is a trade setup I like. Breaking above the 50-day moving average. I really like that one. It was between that one or Best Buy for me today. I went with Best Buy. I really liked it. I mean, this is textbook inverse head and shoulders here. Left shoulder, head, right shoulder, breaks above the 50-day moving average. I mean, this is your neckline right here. Perfect. Put your stop loss, 66, 70, whatever you want. Looks really solid. So I took a long position in that today. Then you have a lot of people keep talking about Nike and everything. It's tradable. I mean, you can get it long right now and put a stop loss below $82. Decent risk reward. Don't know if I'm really crazy about it, but LULU is a better chart. LULU is much better. I mean, check this one out. I mean, you got you got an upward trend line in place. You got some resistance or support here. It's holding that support. Might as well go buy it off of this dip here, off of support. 2 support levels. I think it looks a little bit better. It's going to give you a little bit better return if it does decide to move versus Nike, which is a little bit of a slower growth or value play. NXPI. Semis have been hot lately. Not today, depending on which ones you were looking at, but it was kind of flat today. You take NVDA up a little bit. You take AMD down a little bit. NXPI. Man, I really like this one coming in today, gapped higher, but then it just gave it up the rest of the day. I get nervous about stocks that do that, especially in this one where you had a little bit of a technical reason for buying this breakout yesterday. But as has been the case with semis all year long, they just don't want to hold their gains that well. It's like semis, energy, financials. I don't like any of them this year. I really don't. I mean, they've been an annoyance more than anything. If you're going to go play as a semiconductor company, probably the best one is AMD right now. NVIDIA, obviously, it's trying to bounce. So it's been on a really good run since the lows established in June. But AMD is probably the most healthy of the charts. I mean, it really didn't lose much ground back in May when the market sold off really bad versus NVIDIA, which took just a horrible beating. So I was wondering if that thing was ever going to bottom, quite honestly. And then Dropbox. I've been talking about this one in the swing trading splash zone for a few days here. Gap down, went lower, and then it had a nice recovery. You take TTWO, which I actually also have in my portfolio. It did the same thing. It gapped down, popped back up today. Would love for it to break out of this little consolidation. You're starting to get this extended consolidation in it. I've been in it for about a week. Really haven't made much off of it yet. But if you can get through that, man, I think there's a possibility of like the 120s for sure. But back to DBX. Double bottom here. The breakout level around 2460 or so. It's held that level. It's at 2505. I think that if you were to trade it, you could put a stop loss below these below Tuesday's lows, which would be about 2393. So it's a little bit more than 4%, but pretty good trade. If you want to go a little bit higher, you could just go below the lows of today, which is also the 10-day moving average area, because it has tested this 10-day moving average on multiple occasions and held it. So maybe that would be a good one to do. Just put it below the lows of today, which is also slightly below the 10-day moving average. That's going to be it for today. If you guys have any questions, feel free, email me, ryan@shareplanner.com. Until next time, God bless. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splash zone. Thanks and happy trading.